China will lend more support to strategic sectors of the economy caught in the trade war firefight, and one big American company, namely Apple, could be the biggest visible loser as Washington targets China tech firms like telecom giant Huawei. Computer hardware producers are expected to be the latest on the receiving end of Beijing lifelines. China's stock market saw lackluster volumes on Wednesday as President Xi Jinping speaks of a long march in the trade war. On Wall Street today, the X-Tracker's China CSI 300 shares ASHR ETF was down 0.44% in early trading, nearly twice that of the benchmark MSCI Emerging Markets Index. But in China, publicly traded software and semiconductor companies had a strong day as investors there think two things: they can supply the hardware the US is basically banning them to buy here, and Beijing now has a reason to subsidize them. There is talk in Shanghai that computer hardware companies will receive an income tax break over the next 2 years. Also, China's Social Security Fund stated that the scope of its investments will be expanded. Apple has Huawei casualty. The Department of Commerce (DOC) put Chinese tech companies that make surveillance and telecom equipment on notice. Those companies are largely reliant on U.S. hardware. Their growth has worried the U.S. because Washington believes China plays a rigged game, reliant on subsidies, the locked audience often closed to U.S. competitors and, in some cases, outright theft of U.S. intellectual property that has helped some tech companies move up the food chain. Washington is now punishing those companies based on those assessments. The mobile phone industry is the most visible one in the crosshairs, led by Huawei. Apple, too, is seen taking a hit. According to China's National Bureau of Statistics, China produced 1.8 billion mobile phones last year, down from 2.3 billion in 2016. Around 76% of those were smartphones. Nomura estimates that gross industrial output of mobile phones was RMB 2.9 trillion in 2018, $420 billion, down from RMB 3.2 trillion in 2016. Excluding the costs of imported processors, memory cards and other semiconductors, Nomura estimates the share of domestic manufacturing in the gross output of mobile phones was around 25%, or the equivalent of roughly 0.8% of China's nominal GDP in 2018. So that's the baseline value of the bottom line being targeted in one part of the new tech restrictions imposed by the DOC. Based on China's customs data, China's mobile phone exports to the U.S. were valued at $35 billion in 2018, 4 times higher than 2008. China wants more of that market for its own brands, including Huawei phones. But for now, most of those shipments are of Apple iPhones. China's exports of iPhones to the U.S. were $31 billion in 2018, accounting for 6.5% of China's total exports to the U.S. last year, which came in at $478.4 billion, according to the U.S. Census Bureau. It was another record-breaking year for China exports and trade gaps between the two countries. Apple is highly dependent on China, perhaps more than it lets on. It may yet prove to be the biggest American brand impacted by the trade war. The U.S. Trade Representative has included iPhones on its list of new tariffs under review. Look for Apple's CEO Tim Cook to be making trips to Washington, lobbying for exemptions in the weeks ahead. Downside pressure on China's mobile phone industry will rise significantly, says Ting Lu of Nomura, if the U.S. raises tariffs on around $35 billion worth of China's U.S.-bound mobile phone